in your area of investing, it really is an inefficient market. You're dealing with companies under $1 billion in capitalization.
Oh, I'm dealing with companies that are sub 50 million.
I know, but you have it divided into different categories.
Yeah.
Right?
Yeah.
Some that are modestly followed by Wall Street, some that are barely followed by Wall Street,
right.
and some that nobody even knows about except for you.
Right.
Okay?
That's why, like, the tagline for our Tarsier fund is, we fish deeper and we fish alone, because there's...
Is that what it is? We fish deeper
and we
fish alone. So how do you do that?
This
is a part of value investing that you have to be very, very professional about.
You really have to know what you're doing.
Okay.
And because there are a lot of these pump and dump schemes.
Right.
But there are some real companies.
So name me 3 real companies in the recent past that you have invested in.
We have a company that a lot of your view, which everybody's heard of, which is Steinway, which makes the pianos. It's a micro-cap company.
Right.
They have 8 or 9 million shares outstanding. Stock is trading at $11 bucks, so it's less than 100 million market
they're
value.
just selling pianos? That's their business?
No,
Great.
It's actually not the business. Half of their business is selling pianos.
Yeah.
Half of their business is selling band instruments.
I see.
The piano business is going to be in the toilet, but so they'll break even. Maybe they'll lose a little bit of money. The band instruments, it's really driven by the demographics and how many fourth graders there are. We'd owned about 3.5% of the company.
Oh, really?
Sold it all out in the low 30s, and now we're starting to nibble. We bought it in the mid to low 20s, sold it out in the mid 30s. They'd paid out a $3 special dividend.
Give us a couple of more examples.
Well, there's another company that we own called Fortress International, not to be confused with Fortress Investment, the hedge
Fortress
fund.
International. I like the sound of that.
So what they do is that if you're putting up a server farm or a data center, they do the site selection, they are the general contractors, and they sort of put all of the guts.
Really?
So
they're like a construction company for the internet age.
Exactly.
And that sounds interesting.
All of the companies that fall into this category, sort of the larger companies that we deal with, which will be anywhere from like the 20 million to 100 million market cap range. They all have these very favorable macroeconomic backdrops to them. And we feel as though that they could grow, albeit at a slower pace, but they can grow through a recession. Fortress International, they can grow their
How fast can Fortress grow? 20% a year?
They could easily grow it at 20% a year. If you look, the stock now is probably $1.15. They have about 13 million shares outstanding, which gives you a market value of about 15 million.
Small company.
Tiny little company. The stock was trading at 6. So it was 70 million
So that brings
market
up
cap.
the issue that when we had this incredible market decline, these stocks get killed.
They got obliterated.
Destroyed, right? Because there's no liquidity. There's nobody standing in there.
Not only is there no one standing in there to buy.
This is something that's hard for people to get their heads around because they're usually dealing with much bigger companies and better known companies.
Right.
Right.
But not necessarily better investments.
Right, that's what I wanted to get to. So go ahead, explain why these can be better investments.
With large cap companies, there's a pretty robust consensus that with a company like General Electric, for example, you may have 20 or 30 sell side analysts that follow the company and write reports. You could have another 500 analysts that are on the buy side that cover it for like Fidelity, Alliance Bernstein, these other large firms. All that they're really able to bring is an opinion, because you can't say definitively that this is going to happen or that is going to happen. There's no way to get an informational advantage. It's one of those rare opportunities where you can actually see into the future, and I'll tell you why.
Yeah, tell us why.
Because what happens is that in March there was a lot of uncertainty.
Right.
Over the last 3 or 4 months, the companies have more visibility. So you'll start talking to them, and they say that their visibility is improving, that their sales are starting to come back, they're starting to see a lot more activity, and they're starting to get a lot more positive on the outlook.